Oh, I do like to be beside the seaside.
Oh, I'm busted.
You're right, you're busted. Get out. It's my seat.
See you soon.
Cow. I might be singing about summer holidays, but I think somebody thinks she is on a holiday.
I wish.
Let's find a strategy. And a warm welcome to one and all. And for those of you who have not seen us before, my name is Langers and I am the Scruffy Trader. And sitting next to me is Wonder Wink, love of my life.
Why would you wink?
Because you normally wonder what's going on. And I was wondering what was going on because I had to make my own coffee. And we all know Scruffy likes a coffee, so why weren't you doing your job?
You were in the kitchen and I wasn't.
No, you were playing with my prized possession. My Batman. I love this car. It's great. I've had that. Whoa, I bet I've had it 20 years. Wonderful. Sorry. It's not why you're here. Then again, you might be like here. You see, this is our job. It's our sole income is trading, as you can see behind me. And what I'm trying to do is take Winky through the stages of trading. So you tell me, it's Winky Wednesday. What would you like to see today?
The easiest strategy. Something that's really, really simple. Easy to get in, easy to get out.
Well, you don't want a lot then, do you? Typical woman wants everything all at once. Wow. Right. But she's the love of my life. And what she says goes. So I'll do that. I'll jump on the whiteboard. I'll give you some rules of some basic strategies. And then I'll give you some examples on the screen. And then you can trade it over the next week.
Alright.
Sound like a plan?
Does.
Happy?
Yeah, very.
Sure? So the next part of the plan is why was I making my own coffee?
Because you were in the kitchen and I wasn't.
Yeah. Right, let's jump on the whiteboard.
Well, we're waiting.
Okay guys, so Wink wants a day trading strategy that is about as simple as it gets. Now, there's various strategies that I use. My favourite is zone to zone golden eye. I use it every day. But for a beginner, the push is ideal. Okay, so it's called the push. And I'll give you a rewarded version of what this is. It is very, very simple and it's quite easy to work. But you've got to be sensible with it. All right, and what I mean by sensible, I mean be careful with your stops, be careful with your targets, and also the time that you're going to spend on this. If you think you're going to be at it all day being greedy, no. The mantra I use is score, score, stop. In other words, I'll go to market twice and then that's it, I'll quit. Because I'll guarantee the third time it'll start to try and take money off you. So you've got to be a bit careful, okay? And talking of things that take off me, nice of you to turn up. Well, you made me a coffee. You can come again. That's very good of you.
You must be a bit.
He who must be a bit. You are a sarcastic cow, aren't you?
You asked and I fetched.
I did ask. She didn't have to go. She did it because she wanted to go. Is that right?
You told me to do it.
That makes me look terrible. Do you know what? I'm going to tell you a story, actually, right? This is the way it works in our house, right? We have a little bit of fun every day. Do we have fun every day?
The story's far too long.
It's not too long. I'll make it very short. All right, I'll cut off the bit where she thought I was having a heart attack and the ambulance men were laughing at me because I'm a big guy. You know, I'm 6 foot and 20 stone, all right? They didn't want to carry me downstairs. Long story short, for those of you who don't know, I've got a lovely scar on my neck. And prior to getting a titanium neck, which this story might have contributed to, I used to get massive spasms of, like, the muscles would nerve up and they would lock. So I'd be like this, right? 2 o'clock in the morning this happened. She called the hospital, we had to go to hospital. Right? So first of all, she's complaining all the time we go in there. Bearing in mind, I'm dying. You know, I'm locked like this, and I was in agony.
What's with the mouse?
Right, completely looned. She's complaining because it's 2 o'clock in the morning and she has to get up at 6, right? So that's the first thing. She's having a right royal kick-off. We get to hospital. The doctor looks at me and says, yeah, he's got nerve damage due to the break, blah, blah, blah. You need to release the muscles and get the blood flowing. And there's only one way you can do this. And that is to grab him by the ears and move his head very slowly till it releases the pressure and gets the blood going. Says it'll take about 20 minutes, half an hour. Her, Dr. Kildare here, more emphasis on the kill than dare, decided that she was going to do it.
The doctor said?
Doctor said, right? So she grabs me ears. She goes like that. She goes like that. Then looks me straight at the eye and says, 2 o'clock in the morning, wake up! And nearly ripped me head off.
No, I didn't.
The scream, the whole hospital heard it because I was in utter agony. And she, doctor come racing in. And then what did he do?
He patted me on the back. I said I did a good job.
I was going to pat her on the head, all right, because cook at me, I was in...
Well, your hand must have been all right if you were going to pat us on the head.
Yeah.
Yeah, just a morning.
Mona. All because she wanted to do her hair at 6 o'clock in the morning.
No, I had to go to work.
Cow.
How does your missus put up with you? Must be my legendary prowess as a lover.
Right. I was in agony.
Anyway, get on with it.
Right,
Just
get
a
on with it.
Morning. Girl.
I'm going to live with her. Right, stand there.
So you tell us what
Yeah.
you do.
Yeah, sure. Right. Here are the rules. I'll run through them very quickly and then we'll jump on the screen and I'll give you some examples. First thing you need is what's called an anchor chart. The anchor chart has one job, just one, and that is to define the direction in which you're going to be placing your trades. All right. Now you do this through 2 moving averages. Now, with moving averages, there are 2 types of strategy. You have a push strategy, which is what we're doing now, which is what's called a retest. It's going to come up, touch and push away. Or you have a moving average cross. Now when you're day trading, I don't think moving average crosses are pretty good. They're too lagging and you get whipsawed. Because of the oscillations of a 5-minute chart, they just cut you to shreds and you'll lose more than you'll win. With a retest, it's a little bit calmer and you're looking to go with the flow. All right. So you would have a 50 plus a 21. And the idea is you're seeing them coming together, like flaring apart. So you'd have your 50 moving average, 50, and what you're looking for, depending on your directions, is the 21. Now on that example I've just drawn there, that is short. Do you understand what short means?
Going down.
Going down, that's right. Terminology is this is for beginners. It's a beginner strategy. Terminology is something you get your head around, all right? Because talk a strange language. Don't ask me why, because I really don't know why short is down and long is up. Genuinely don't know. Hey ho. So in this instance, that is short or down, all right? If the 21 was above there, it would be long. That's it. That's all you need to know. So you know, looking at the 1 hour time frame, if you see the faster below, you are looking for shorts only. All right. So once you've got that rule, very, very simple. All right. You need a trading chart. So we'll put that up there. So rule 1 is the 1 hour and you are looking for direction. All right. You can frame this up, frame this down, but I find the hour works very well for a day trade. If you're struggling for time, do your anchor on a 4 hour, enter on an hour. For the purpose of what we're doing today, we're going to be putting the bias or the anchor chart on an hour and the entry chart is a 5 minute. Okay. So when you come to the 5 minute, you still need 2 moving averages. Now use a 14 and an 8. Now all of the moving averages can be mixed and matched if you want to play with it, but the one you can't is that one. That is always 8. Because you can say, well, I want to look at 100 and a 100 to get me direction. I want to look at a 21 and a 14 to get me direction. But for this, the way that I would recommend is a 50 plus a 21 for direction. And then what you need is a confirmation of the direction using another 2. So you would have another moving average, which would be the 14, and then underneath it is your trigger moving average, which is the 8. And what's happening here is you're waiting for these two to align the same. So again, the slower and the faster. The 8 below the 14, showing that it is down. Confirmation bias, in other words, that chart has told you that you are going short. The 14 and the 8 are confirming it on a 5-minute chart. So you're going with the flow. All right. And then what you're doing is you're waiting for a tag of this, or at least a touch of it, but not a close above the other side. So you could say have your candles come into it like so, starting down here, working their way up, and you're thinking, well, the market's going up, I want to go short. Well, this is a good thing, because you're then waiting for a candle to come up, touch it, and as long as it stays there, you will then put your order on the other side of the candle. So if it does continue in that direction, you are not taken into the trade. But inevitably what happens is you'll start getting candles coming the opposite direction, like so, in the direction of the biases, because both biases are down, and what you're looking for is an optimum entry, and a bounce off that 8 moving average is ideal, because an 8 is what's called the T line, and it's where candlesticks were invented in the first place. All right, so subject on its own, but it's a moving average that repeats itself regular. And what you're doing is, once you're in, if you have a nice level down here, that would be your maximum target point. And what you want is a decent pocket of air between your entry and the level. You know, if you want 5 pips, then you need a gap of 5 pips. If you want 10 pips, you need a gap of 10 pips. And then it's a case of managing your trade once you're in it. And how do you manage your trade? Just be sensible. You know, don't go mad with your stops. Nothing wrong with a wide stop, as long as you're prepared to manage it within the trade. But just be sensible, guys. I guess that's the easiest way. Stops are a subject on their own, but this is just showing you a criteria of how to set a chart up and how to get into it. And I'll take you through trade management of how to place a stop, how to manage the position, and then get some profit from it. All right?
Yeah, brilliant.
So hope that makes sense. Let's jump onto the screens and we'll see some examples, and I'll just pull a chart up that's now, here and now, rather than a cherry pick chart. Okay?
Isn't that logical?
Okay, boys and girls, we're coming onto the screen, and I'm just going to fire up a basic chart. So very simple. This is cable, pound US.
Yeah.
It's an ideal candidate for this type of strategy, guys. Okay, so if you started with the hour and you go to put on your moving averages, start with a 50 and a 21. All right, so what we're looking for is the 21, which is the blue line, to either be above or below. Now I'm looking for recent data, so we'll start it with this one here, where it is below. Now it looks scary to a degree, but it's not as what you think. Okay, so from that line moving forward, where these have crossed, all you're looking for is shorts. All right, because you can see it, they're very well apart. If you're in a cluster like this, and you can't quite see whether it's above or below, just leave it alone, all right? Because it could whipsaw around. This here, where you can see it's separated, moving away from each other, then that's a good place to start.
Right.
Okay. So that's the first thing. All right. So from here, we are looking for shorts only. Right? So we're going to drop it down to a trading chart. Now, for the point of this exercise, it really depends on your own profile. We're going to drop this into a 5 minute. Okay. So we're looking for shorts on a 5 minute from the point of that cross. Okay. So that's here. Now that's 1 o'clock in the morning. That's too much. So I'm going to take that line to 7 o'clock. Okay. So this is 7 o'clock in the morning, which is a reasonable time to start. Okay. So what we're looking for is the next two moving averages. So we're going to switch them two off, and we're going to put on the trading moving averages. Now these happen to be an 8 and a 14, and it is the green that we're interested in because it needs to be in alignment with the hour chart. All right. So in other words, the green wants to be below the 14 to tell us it's short, and then the next part of the puzzle is how to get in. Well, we come to market, we can see it's moving down, but we're wanting it to touch or break this line. So there it comes down, it's moved up, it's touched it there. So this candle here, if I make this a bit bigger, just so we can see it, here is the trigger line. All right, because you can see it's coming up to react. All right. Now what you're doing is you're going to place your order underneath it, this side of it, just like so. Now if that keeps on going and gets on the other side of these two, it's kind of done and void. Leave it alone. All right. But your order is here so that it is out of the way of the noise. Okay. And you let that close. That has to close before you place your order in. So that candle closes, and then you put your order in. If the next candle just keeps on going and closes on this side, forget about it. But what happens is, so it turns around, it clips your order and takes you straight down to, well, I've got levels actually marked in. I'll just take out my zones just to tidy this up because this is a working chart. Get rid of them. And then you can see it clearly. All right. That took you straight down into this area. And what you're looking for is roughly around 10 pips. So that was, well, it's 9.3 on that entry. Okay. It's a bit tight, but if you did mark in, say, 10 pips, you would have easily got it. And it's there or thereabouts. And one of the reasons I put zones on, guys, is because the markets are not pip perfect. As long as it's in the zone thereabouts, you're normally okay. All right. But that could be your first trade. All right. And then it's come away. It's gone up. But this one pushed down, comes up, and it's on the other side. So just leave it be. Okay. You could say there's a trigger point there because it's gone up, but it didn't quite get there. That one touched and came back down. So you could be brave and put your order in on this. And then if you put your, well, there's your little box. So put your little box there. Just move that over to 10 pips. It would have just clipped it. All right. But if it ran away from you, well, it's run away from you. So this is why you've sometimes got to be a little bit careful when you're watching. This is just an example, guys, to give you the idea of what we're going on. It's over there, so you ignore. You know, comes back, ignore. Here, right? Again, we're getting some setups around this area. All right. So the price has come up. It's tagged. You can see that. But it's closed on the right side. You can put an order in there. Well, you can easily say there's 10 pips there. Even here, it's come up, it's tagged, it stayed below. If you put your order under that candle, and this is a good example of staying out of the equation, that one went up and closed on the other side. So just close, take your order off, right? Because you don't know if something like that is going to happen. If it's crossing the moving averages, it could keep going.
Right.
All right. So that's the general idea. So we know that one is. It's come back up. There's another tag, these lot here. So it's kind of giving you this level as an entry point. But sure enough, there's your 10 pips. This is if you're just targeting 10 pips, and it's giving you plenty of examples. Again, it's come down, it's gone up, it's gone down. It's tagged here. So we're looking for 10 pips. Now this is an example of a dangerous trade because you've got all of these levels in the way. So you kind of leave them alone. I hope this is kind of making sense, giving you a little idea. We'll just skip it forward a bit so you can sort of see what happens the next day. Where's 7 o'clock? That'll do. Kind of around this area. So again, depends on where. That might be a bit nasty because, well, it depends whether it picks it up or not. That might pick you in, but then it would have ran away. But if you're doing scruffy madness, now placing stops is a subject on its own, and I have a tendency to use a wide stop. And if you come into the Discord group, you'll see exactly how to manage a trade, and I'll go through that with you fully. Right. Because you can stage in up to a level, and it'll make you more money.
All right.
It makes you lots of money. In fact, it makes you more money than any strategy. All right. But as you go through, you can kind of see the gist of how this would work, because you're going with the dominant trend all the time. And every time it tags, see there, you could place your order in, but it's not picked up because it runs away. So you wait. Up here, comes in, but you've got that in the way, so that keeps you out of trouble. So your levels keep you out of trouble as much as a close above, right? Because it's all about trade management. What you're looking for is a good pocket of air between there and there. So when you are bouncing through and you can see it, that's all you're looking for over and over. A decent pocket of air. And there we are. We're coming into this pocket of air, because even here, if it tags, we'll put our little 10 pips on this. See, there's a pag. It's not the best trade in the world set up, and you can think to yourself, right, there's your 10 pips. So where's your tagging point? It's roughly about there. Didn't quite make it, but you're thinking to yourself, oh, panicky, panicky. Because if you've got a tight stop, it takes you out the equation. But even on all of these horrible little trades up here, because you're going with the dominant trend, if you manage your trade, you'll get out at either scratch or a profit. Right. Every time. Now there, that's horrible choppy. Didn't quite go down, went up, and then rocketed, but it did hit your target, and you didn't have to wait that long. In fact, how long did you wait? 2 hours. So to sit in a trade for 2 hours isn't that bad. And then to further onto this, what you can do is, if you think it's going to run, you can take most of your trade off, right, and leave a little bit running. So say take 90% of your trade off at 10 pips, pull your stop in so that it's break even at that point. Yeah. And then just see if the other bit will run all the way down onto the level. Right. So the idea of this was just to give you some examples of what to look for. What you've got to remember is, with any strategy, they're not 100%. They'll never work. You've got to look at your trade management. switch this over. Look at your trade management. In other words, place your stop sensibly. If you are using a wider stop than what you're used to, understand how to stage into it, or wait for all the conditions to be perfect. Now, the higher you go up the scale, the easier this becomes. So if you did it on a 4 hour and you used a 1 hour to enter, it's actually easier than on a 5 minute. With a 5 minute, you've got to sit and watch and manage it all the time. But the crux of the strategy are there for you to use. There are a couple of little extra bits to it that can add more confluence, and I'll go through that with you. But the bare bones is exactly what I've just shown you. So I hope that helps. By all means, drop your queries below. I'm always happy to connect with you. If you want to see exactly how I trade, because I use zone to zone and golden eye mainly, and you'll only ever see that in the Discord group.
Are you serious?
But I'm happy to show basic stuff like this. And this is a good beginner strategy.
Yeah.
Okay. So hope it helps. And as always, guys, trade well, keep your risk managed, and above all, do what you love, and the money will follow. See you all in the next one.